What's going on, everybody? Welcome back to Momo Trades. I hope everyone had a great trading day today, made some money out there. It was very, very volatile. Um, so on days like today, it is kind of important if you need to scale down to do so just to get your mentality in check. But this video is mainly going to be focused on the importance of trend lines and how powerful they really are. These trend lines work in any market. Currently, we're looking at the S&P 500 futures 2000 tick chart, but the rules that I'm going to go over today work for any market, any time frame, because price action is king. Whether it's crypto, forex, futures, options, stocks, what we're going to look at today is valid in any instrument, any market, because these are the same trendline rules that everybody knows. So when I came in today around 6 a.m., I saw that there was a massive, massive downtrend. This is mainly due to the CPI news that came out today. But the first rule with trendline is that once there's a break and a new low, in the case of a downtrend, that's when we can start looking for potential reversal setups or the start of congestion or a mini trading range, which is what we got here. So because trading price action is all like a language, we want to always draw our trend lines and channels that will give us the best interpretation of what the price is telling us. Like I said, this is a language. We want to know what's going on, and all these drawings are doing is help us interpret what we're seeing on the chart. So we have a break and a new low. What does that mean? We can start looking for potential long setups if there is an enticing one, which comes right here. We want to always draw the short-term trend lines, especially in ranges, because people are looking at all different sorts of charts, all sorts of different time frames, tick charts, volume charts, whatever it may be. So if we use these short-term trend lines and wide trend lines, not only do the wide trend lines help us interpret data that is on a bigger time frame, but the short-term trend lines help us kind of analyze what's going on at an even shorter time frame. So once we are looking for long setups because there's a break in a new low, we want to see failed second entry shorts, or we want to look for second entry longs. So what's a failed second entry short? Well, I'll show you right now. Counting from this new low, we have a strong push above the EMA. When this bar all the way on the right side breaks below this green one, that's a first entry short. Once we go up again, and then the next bar breaks below this, that's a second entry short. You want to take second entry shorts in downtrends in the right context. You don't want to take a second entry short here because we're obviously above the EMA. There's a short-term uptrend, but what we do want to look for is failed second entry shorts and trap people who are going short too early, especially in the middle of this range. We're going down, and we have a nice bullish bar off of the EMA. If the next bar breaks above this, we want to buy and trap all the traders who went short. Also, because there's this short-term uptrend in place and we have a break, we're still looking for a new high before we should even be thinking about going short. On top of that, we went from the top of the range to the bottom of this potential range. And what do we think is going to happen next? We think that is going to go test the top of the range again. So when the first entry short, second entry short, fail your triggers above this bar, if you went long right there, it would have been a nice trade. And also, I did record all of my trades today, so I'll be going over those at the end of this video, so stick around for that. But for now, I'm just going to go over the charts as if I was trading live, because I think that's the most educational way possible. I think people learn the best by just putting themselves in the shoes of what it would be like to interpret this chart in real time. So as we see, these bars are super, super stacked up because it's so volatile. And at this point, we really just want to wait till market open unless a very nice trade setup presents itself. So once we reach the top of this range and we kind of push out of it, we want to start looking for short setups. And we always want to adjust our trend channels and our ranges to fit the most price action possible. So when I see that we kind of push up a bit and there's this new low where we bounced up there, that signals to me that there is the potential for the trend channel to look something like this. My bad. These NinjaTrader trend channels are always tricky to deal with like that. Okay. I see another nice setup. Okay. We see another uptrend, a break, and a test at a new high. If we get a nice bullish bar or bearish bar at the top of this range, we want to start looking for a short setup for two reasons. In ranges, we want to look for shorts at the top of the range and longs at the bottom of the range, because this is where all the resistance and support is, as well as a break and a new high being in place right here. So combined with the fact that we have a bearish bar, a break and a new high, multiple touches at this resistance, we bounce once, twice, and now a third time. We have another matching high here, another bearish bar. So you can be confident in going short there or there, and that would have been a nice trade as well. Once we go again, we want to always draw our trend lines, which we can do here. We have a new low, a break, and a new low. First entry short. Second entry short. Failure potential. Also, we have a new high, first entry long, second entry long. Also, we have this uptrend, and we have a break, and we're looking for a new high. So because this is the second entry, we're looking for a long setup right here, right? If the next bar breaks above this, we should definitely take a long, right? Actually, in this case, this is where I had my first losing trade for the day. My only losing trade. I went either 4-1 or 5-1. But like I said, we'll go over those trades later. But the reason I got trapped on this trade is because even though it's a first entry long, second entry long, we're looking for a new high of this short-term trend. It's of the utmost importance that the signal bar is very, very, very good. And by good, I mean excellent to the point where it's a 99% probability, which in this case is not. The other reason why I got trapped is because this was going very fast. But the reason that this isn't a great signal bar is because if you look at the stem, most of this bar actually traded below the EMA. It wasn't until the end of the bar when it finally broke above. So all the smart traders saw this first entry long, second entry long as a good setup, but not a great one. So what you want to do in this case, when there's not an excellent setup, just sit on your hands and look for a potential trap, which is the failed second entry long. So we have a first entry long, second entry long. It triggered. All the people who went long got trapped with this bearish bar. What you really want to do is wait and go short right there. And that would have been an excellent trade. Trap trades are much, much more high probability than even second entry longs, failed second entry longs, second entry shorts, failed second entry shorts, because it's going to trap all the people who went long too early, and it's going to combine those losers, those people who had losers, with people who are also sitting on their hands and going short. Once again, we go down and we don't make it to the bottom of the range, but we have a strong bullish momentum. So we want to look for potential failed second entry shorts. Draw your trend line once again. There's a failed second entry short, but obviously the signal bar is very bad, so you're not going to go long above that. And we're moving along, and we break out of this potential trading range. Once again, because there's a lot of resistance right here, what do we do in real time? We raise our range to fit the most price action possible. This is the language once again, so we want to draw our chart to the best of our abilities to allow for the best interpretation of price possible. Once we have all this resistance here, bearish momentum down, draw the short-term trend line. We have a new high here, first entry long, second entry long, failure if the next bar breaks below that. Very bearish bar. That looks like a solid trade to me, and it worked out. I did take this trade as well, I believe. Now, this is very interesting as well. In ranges, we always expect to go from the bottom of the range to the top of the range, down to the bottom of the range. In a healthy trading range, that's what's supposed to happen. Here we have a break and a new low, followed by strong bullish momentum. So at this point, I'm going, okay, this is interesting. We went to the top of the range, we broke below the EMA, and we bounced at the midline. So this is saying that there's a lot more bulls in the market right now than bears. So at this point, even though we might get a nice setup at the top of the range for a short entry, I'm going to sit on my hands because, like I said, there's bullish momentum, and I'm not willing to risk this trade right here is what I'm specifically talking about. So, my bad. But if we look right here, there's a break and a new high, a bearish bar, counting from this new low, a first entry short, second entry short, third entry short. So, in reality, some people might have taken this trade just because you can treat it as a failed breakout, but I'd sit on my hands for that trade. All right, let's move along. We see a lot of resistance at the top of this range, which only gives us more validation that we're seeing the market the right way. It's moving along. We see finally a rejection from these highs. So we want to look for second entry shorts or failed second entry longs. We do see slight uptrend, break, lower high. This is technically a new low. So first entry short, second entry short right here if the next bar breaks below that. This does look like a pretty good trade. In real time, I didn't like this trade just because half of the bar was above the EMA. It might have worked out for a scalp. Let's see if it would have. 85 to yeah, it would have worked for a 1 point scalp, but like I said, because most of the bar, even though it's a very bearish looking bar, because most of it is above the EMA, I skipped that trade. Okay, moving along, we just have a lot of confusion, a lot of congestion until we have this strong momentum down. This looks like a great trade to me, however. New high, first entry long, second entry long, failure. That's an excellent trade. Notice how that bar is much different from this. This bar, half of it's above the EMA. This one, 85, 90% of it is below the EMA. Let's see if we can get any more great setups. Once again, we reach sort of the middle of this trading range and we bounce up. So what does that tell us? there's more bullish momentum than bearish momentum, which gives us very good reason to take this trade all the way on the right side. New low. First entry short, second entry short, failure. That was another excellent scalp. You could have been done for the day right there. We had a lot of great setups. Because later in the day, it did get very, very choppy, very congested, and a lot of times you just want to stay out of that. But we're going to go over that in just a sec. Now, we see that we're moving up, and we see a little breakout of the range, followed by a lower high, bearish bar. We had this short-term uptrend, break, new high, lower high, top of the range, bearish looking bar. You could argue for this trade. It's very enticing. The only risk is that, like I said, there's the bullish momentum because of the bullish divergence. We didn't make it all the way to the bottom of the trading range, so there's more buyers than sellers. But because there's so many good things to like about that trade, I would have taken it. You could even argue for a long right here. I don't know if I would take this because you would be going long at the top of the range, even though there's a bullish divergence as stated. There's a break and a new high of this uptrend. You could argue that there's some sort of wider trend like this, but there's only one touch on the top, maybe a third. You're not touching it quite yet. You are off the EMA, but just look how many bars are stacked right there, like dozens. So I would skip that trade because of this break and a new high, and because in trend trading ranges especially, you want to always follow the short-term trend lines. I found that they're much more accurate than wider channels in trading ranges. It would have worked out obviously, but it's pretty risky. Now, once we do get multiple new legs, that's when we can start seeing that there's a wider trend in play. See how that's much different? 1, 2, 3, 4, 5, 6, 7 touches as opposed to just 1, 2, and maybe a third touch here. Now this looks pretty valid to me. Not only is it bouncing at the bottom and the top, but it's also playing this midline. We do get a good amount of congestion here, so what do? We just always want to draw a trading range, even no matter how small it is, because it helps us just interpret the chart once again. We're seeing a lot of congestion, and you really just want to stay out of most of this until you break out, obviously. Then you can start zooming out and seeing, okay, what's going on in this day. We went all the way from the top down to the bottom. Obviously, we came back up and sort of tested these levels, but there's a break of this trend, a new high. So what does that tell us? We want to potentially start looking for short setups or reversals. This does look something like another range forming as well. So we want to keep that in our back pocket. And like I said, let's draw our short-term trend lines. We had a downtrend, break, new low, followed by a few more legs, but you can really count this as one leg, two legs, two new low. Bullish momentum. In real time, you just want to draw the trend line. And we see that there's just a lot of congestion. Once again, what that tells me is that, okay, maybe this is the real midline around here where prices are really reactive to. It's always just common sense, and whatever seems the most valid is just stick with your gut. Whatever seems right is probably right. Don't overcomplicate things. This looks like a failed second entry long here. You could argue for that trade. Here's the new high, first entry long, second entry long, failure. However, it is not at the top or the bottom of this range. It would have worked out for a scalp, but it is risky because look how many bars are stacked right around this area. Let's see how many points it would work for. Yeah, you would have just scalped out. Moving along, we have another short-term uptrend. What do? We just draw it. Break, new high. We're expecting to reach these top levels again. And we even go further. But once again, we have a break and a new high. First entry long, second entry long. After a break and a new high, you want to skip that trade. It would have worked, but because there's already break new high, I would have skipped it. There's the potential for the channel to look like this. Something like that. But like I said, most of the time you're going to be better off just only drawing the short-term trend lines in trading ranges. This one does look a little nicer than if we would have looked at this trend right here, because notice how this bar is off the EMA, but it's not touching our trend line just yet. Here, we can see that there's actually rejection not only several times at the EMA, but also a bullish bar that fits this trend very nicely. So in my mind, I would have skipped this trade just because these bars are pretty congested. But you can see it as a breakout pullback. We broke out at the top, we went back down, and we reacted to these price levels. Let's see what else we can get. But like I said, now we're getting towards the middle of the day, and the price action just doesn't look as neat. There's just a lot of stacked bars, a lot of congestion. However, this looks like a very nice second entry short right here. New low, first entry short, second entry short. Looking for a new low, this downtrend, break. Second entry short, nice setup. Moving along, let's extend our trend line once again and zoom out and see what's going on today. We were trading in this part of the range. We were trading this part of the range. There's probably an even bigger range going on, but the smaller, shorter term ones help us more than that. Okay. Going up once again, looking for potential short setups at the top of this range. I really don't see much here. Just a lot of congestion. You could argue for this trade, but I really don't like it. Like, there's just a lot of congestion right here, and the bar is almost all the way above the EMA, so I'm not even going to mark it. And once again, we have failed second entry short setup, new low, first entry short, second entry short. After we didn't even make a new low of this downtrend, we can kind of tell there's another mini range going on. You could argue for that trade as well, but like I said, there's just a lot of bars stacked here. We're getting towards the end of the trading day, so it is going to be risky. It would have worked out for just the scalp, but it's gonna be risky at this time of day, and just because you're in the middle of the range. And yeah, that's pretty much it. Let's take a look at all the live trades I took today. All right, and here is the first trade I took for the day. We reached the top of this range. It's about 621. We had a first entry long, second entry long. Actually, this bar ended up being a doji, so I skipped it, but the trade setup appeared shortly after this. We had a double top, first entry long, and then we're going to have a second entry long failure rejected off the EMA, which will appear in just 1 second. All right, and here we go. We had a first entry long, second entry long, failure. I placed my sell limit one tick below there, or one tick back in the bar. And I did go for 10 ticks today, 2.5 points, just because it was such a volatile day and I was confident that the trade would work out. Um, this is a very good trade. We're at the top of the range, expecting to go down all the way to the bottom. We had a strong push below the EMA. I did get stopped out, so let's go to the next trade. And like I said previously, this is actually where I got trapped. It was going very fast, the markets. We had a first entry long and a second entry long set up. I should have waited for the failure because this bar traded so far below the EMA and the majority of it was below the EMA, but it happens. All right, and this is my next trade. It's another failed second entry long with a bearish bar below the EMA, new high right here. First entry long, second entry long about to form, just did form. And if we get a failure, which means the next bar breaks below it, I'm going to put my limit order one tick back. The signal bar is this very bearish bar. Once the next bar breaks below it, I put my limit order in, and I was in and out. Once again, no runner, but it is what it is. We get the runners on certain days when we have to get a little bit lucky, but our method is all about the scalp. I did get a little bit of a runner actually, I believe, a couple points, but nothing too crazy. And yeah, there I got stopped out. All right, and here is my next trade. Another failed second entry long, I believe. We had a new high, first entry long, second entry long, failure. Nice bearish bar. And it worked out for 10 ticks again. But looking back, I probably should stick with 1 point scalps. But like I said, this was a very unique day in terms of the volatility, and you don't get that a lot. So I wanted to capitalize on that. This trade was pretty risky because the bar was actually mostly above the EMA, but because it was such a bearish bar and we are going from the top of the range and we got rejected so many times. If you look here, here's a high, the next high is lower than that, the next high is lower than that, the next high is lower than that, and we had another lower high. That was all reasons I really like this trade. Let's see what happened to the runner. Okay, here's where I got a little bit of a runner, but I ended up getting stopped out after just a couple points. Yeah, these bars ended up stopping me out, so let's go to the next trade. All right, and yet another second entry long, or actually this was just a second entry short, I believe. I'll zoom in, and we had a new low, first entry short, second entry short, strong bearish momentum. We hadn't had a new low this. It's our first break. It also looks like a failed second entry long on a longer time frame, new high, first entry long, second entry long, failure, combined with the second entry short. Very high probability trade. Once again, we're looking to go to the bottom of this trading range. All factors that are very good in our favor. And it ended up working out. Once again, I actually did not get a runner, which is sad to see, but we're gonna get it next time. We're gonna get him. All right, let's move on to the next trade. All right, and this was the final trade I took of the day. We reached the top of the range, bearish bar, followed by a lower high. I did talk about the bullish divergence, but in real time, I saw this as a short-term uptrend. As you see, I did draw the wider term trend line, but immediately I thought, okay, what's more accurate in this case? And even though I didn't draw it because I didn't have the time, I remember that I was thinking in my head, okay, what's more accurate is that there's this strong push up, a break, new high, followed by lower high, and I went short. And unfortunately, once again, my runner did get stopped out, but it is what it is. Yeah. All right, let's go back. All right, there we have it. Hope you guys enjoyed the video. Hope you guys learned a couple things. Leave me some comments. Leave me some suggestions. It's a work in progress. But yeah, thanks for tuning into Moo Moo Trades. Peace!